Hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips, rocking and rolling here. 19th of Feb 2025. No trade calls, no recommendations, or response on their own stuff. Here for educational purpose only. So here we go for another one of these Substack videos. Something I thought we'd look at is Nike. I think this is an interesting one to discuss. It might be a brief video, but every year for subscribers, we try and look at a bunch of names as possible plays for the year. Either they can be deep value plays or big position trades, whatever. And one of the names we looked at was Nike, and I think it's quite interesting. Now we do have some other ones too, but which I might do video, but they've kind of moved a lot, so I don't think it's that interesting. But here we've got Nike, right? So what's without looking at fundamentals, whether you agree with what they're doing or not, let's just look at the technicals. Now, looking back, if you flip to a monthly, what is clear is that we've got this big previous high, previous resistance, where we saw a lot of chop around, but once we broke above, right? Once we broke above, every time we came back inside, 68.20s, bam, you see buyers coming in here. You have big flush buyers coming in supporting, right? And even here it's being supported. So that's clearly a key pivotal level, which you would not expect to, completely blow through unless there's a real serious catalyst. And in terms of ugly catalysts for the stock, there've been a gazillion of them, right? You name them. So you'd expect this to be fairly strong, or especially when it was coming down. This is clearly a level which you wanted to have on your chart and you want to be focused on as a potential low, right? Or a play to try tactical swing long. So also here, if you look shorter term, starting from last year, what happened, we got here an attempt to hold, came back, printed lower lows, and still holding that key level, right? So going back on a daily action is even more interesting, right? Because we've got this whole aggressive move here where we gap down aggressively and we're making lower highs, lower lows. And then what's happened, we base, right? We put here base, we try and take it out twice, and the market can't get any traction. We rip higher, even with a gap, another gap, explosive action trying to come back in. Then what happens, we're on the move higher, we're holding trend lower. But if you extend this, right, and you keep on looking at what's happening with this, it's a strong trend down, that 200 DMA being respected, the market whacking it down, playing whack-a-mole here. And there, again, we try and defend this low. We come in, we print lower lows, we can't, and we try and move explosively. And then bam, all this aggressive action, we gap down, right? Panic move down, gap down. But what happens? Bam, 68.27 holds again. We reverse. This probably looks like some kind of a false break to the downside. And it's trying to go off to the races. Now, clearly, we're not out of the woods unless we get some traction. We close back above the 200 DMA. If you look back on here, we haven't closed back. We weren't above the 200 DMA until, back in 2023. So that would be a very important point. But this is clearly an interesting chart showing how you can look at big, long-term levels to wait when you have big unwinds to find very interesting entry points, right? So let the market come to you rather than trying to chase it, trying to catch a falling knife. So here, the other thing which is interesting is if you look to the upside, right, even short term, what would you expect? Well, clearly, if the market can take out this whole, this descending trend line, but be far more focused psychologically on daily closes, weekly closes above the 200 DMA, then, you would be looking at a potential very quick move back into these 88.90s. And then, you've got another big gap fill here all the way into the 120s. Very interesting. Now, obviously, if you go back, you've got gaps all over the place into the 160s. But right here, for the purpose of this, let's look at these shorter term levels, which is basically back into the, 120s or back into the 80-90s if we can get day closes back above the 200 DMA. Then something which is interesting, just for shits and giggles, let's say, I did some deep search, using various AI engines to see, what would be the valuation and price targets on Nike, right? Feeding it all different kinds of reports, and all different kinds of prompts. And basically, irrespective of what engine you're using and what you're looking at, it's quite interesting that basically most of them come in with basically worst case scenario $65, which is below that 68, but that's, this is giving you a very good idea of what the downside could be, because clearly you could get some stop hunts below that 68.20. And I would say basically bets are off if you start getting day closes, weekly closes below the 68.20s, but any move below that closes back above and that doesn't take out that 65, that kind of $3 area, that's a fairly solid place to, very solid support and very solid place where you're really wrong if we close below that zone. And then if you look at neutral scenarios, everybody's giving a price. All the results I got back through pages and pages of report were basically neutral target in the 85-95 range, which funnily enough you could get to just by drawing squiggly lines on a chart or looking at a blank chart, because that's a gap. And the upside price targets I got is 120, 123, and 125. Well, surprise, surprise, that's pretty much lining up with this upside gap. So once again, deep AI, big brain, or looking at a blank chart and the gaps giving you very similar results, which I thought was quite interesting, just to put that comment out there. So basically, here we go. I thought this was an interesting chart, trying to make these videos short and informative, and hopefully you can learn something. Okay, wishing everybody all the best. Talk to you guys soon. Take care. Bye-bye.